There is a tax rise costing the typical UK worker about £640 this year. No Chancellor ever stood up and announced it. No rate went up. It will never appear as a line on your payslip. And at the last budget, it was quietly extended all the way to 2031. It's called fiscal drag, the stealth tax, and it works through one simple trick: your wages keep rising, and the tax thresholds that decide what you owe stay frozen solid. In the next few minutes I'll show you exactly how the trick works, what it's costing you at your salary, and, at the end, the completely legal way to claw a serious chunk of it back. Quick note first, this is general education, not financial advice. Start with two numbers that control almost everyone's tax bill. The first is £12,570, the personal allowance. That's the slice of your income you can earn each year before any income tax is due at all. The second is £50,270, the higher rate threshold. Cross it, and every extra pound is taxed at 40% instead of 20%. For decades, these numbers moved up most years, roughly tracking prices, so tax quietly kept pace with life. Then, in 2021, they were frozen. And every government since has kept the ice on. First to 2026. Then 2028. And at the autumn budget, to April 2031. A full decade, frozen. A number that never moves sounds harmless. It is anything but, and one picture shows why. Here's the picture. The flat line along the bottom, that's the frozen threshold. It hasn't moved since 2021 and won't until 2031. The rising line, that's wages, climbing year after year with inflation and pay rises. Watch the gap between them open up. Every pound of that gap is income that used to be protected or used to be taxed at the lower rate, and now isn't. Nobody raised a rate. The line simply stood still while your pay climbed past it. That gap is the stealth tax. Put real numbers on it. If the personal allowance had simply tracked inflation since 2021, it wouldn't be £12,500 today. It would be about £15,770. That's £3,200 of your income that would have been tax-free, and is now taxed at 20%. 20% of £3,200 is that £640 a year from the start of this video. That's the trick, in one chart. And it reaches every rung of the income ladder. Someone working full-time on the minimum wage is paying around £130 more tax this year alone, purely because the thresholds didn't move. A typical full-time worker, anywhere from £30,000 to £50,000, is down that £640 a year. Earn £55,000, and it's worse. The higher rate threshold should be around £63,000 by now if it had tracked inflation. Instead, you've been dragged over the frozen line, paying 40% on a slice that was never meant to be higher rate income. Cost, roughly £1,500 a year. And above £63,000, the freeze is taking over £3,000. Every single year. This is why, by 2030, more than 10 million people, and nearly 1 in 5 UK adults, are set to be higher rate taxpayers. A ban designed for the highest earners now catches teachers, nurses and police officers. In just 3 years, the freeze pulled £4 million extra people into paying income tax. By the way, if a number like £640 is news to you, that's exactly what this channel does. One UK money number that actually matters, explained in minutes, twice a week. Subscribe and the next one finds you. Because here's the thing, this isn't finished. The freeze runs to 2031, and every pay rise between now and then widens that gap a little more. The £640 you're losing this year is the smallest it will ever be. Next year the gap is bigger. The year after, bigger again. Which raises the question that actually matters: what can you do about it? Quite a lot, actually, because the whole trick relies on one thing: your taxable income creeping upwards past a frozen line. So the counter move is simple: lower your taxable income, without lowering what you actually keep. The single most powerful tool is your pension. Money you put into a pension comes off your taxable income. Pay in through salary sacrifice at work, and it never even touches your payslip as taxable pay. You also save national insurance on it, which matters, because the national insurance threshold is frozen at the same £12,500 too. And if you're anywhere near that 50,270 line, this gets dramatic. Say you're £2,000 over. Put that £2,000 into your pension, and it would have been taxed at 40%, so it only ever felt like £1,200 in your pocket. Instead, the full £2,000 lands in your pension pot, growing for your future. You've stepped back under the line, dodged the 40% band, and kept every penny working for you. The freeze drags you over the line, the pension walks you back. There are smaller levers too, a marriage allowance if you're eligible, gift aid if you donate. But the pension is the big one, and it's exactly what the next video is about: salary sacrifice, the pay rise your employer never mentions. So, the recap. The thresholds that decide your tax are frozen until 2031. Your pay keeps climbing past them. That's a £640 stealth tax on a typical worker this year, over £3,000 for higher earners, rising every year the freeze lasts. And the main way to fight back is to shrink your taxable income, with your pension doing the heavy lifting. I've built a free take-home pay calculator that shows exactly where you sit against every threshold, and what a pension contribution would change. It's linked in the description. Here's my question for the comments: the frozen line is 50,270. Which side of it are you on, and did you choose that, or did the freeze choose it for you? Tell me below. I read every one. Next time, salary sacrifice, the legal pay rise hiding in your pay slip. See you there.